In rocket science, there is a concept called escape velocity. In order to reach orbit, a rocket needs to spend a massive amount of fuel. And if it burns 99% of the fuel before it reaches orbit, it crashed back down to Earth. It will all start making sense when I show you this graph. The red line is the fuel burn and the companies pouring billions into the AI infrastructure. And one study found the estimate to be around $600 billion. And it's growing. But the green line is gravity. In this context, the revenue. The economic reality is that they are not able to generate enough revenue, and this is holding them down. And the gamble is simple. Can they reach profitability before they exhaust all the gas? If these two lines don't meet by next year, then it may see a scenario where the bubble crashes. Welcome back to the channel, I'm Sean. Let's dive in. So first thing first, why 600 billion? And why this hype is different from any other bubble? To understand this, we have to understand what Wall Street started whispering about. It's called depreciation trap. Usually, when a company builds a factory, it lasts for 10, 20, 30 years and it depreciates slowly. But AI is different. An Nvidia H100 GPU costs around $30,000. But because technology moves so fast, that chip is effectively obsolete in 3 to 4 years when next generation arrives. And that due is coming in 2026. And that's when companies with 3 to 4 years old chip need to start investing again. This changes the math of business entirely. Microsoft, Google, Meta aren't buying permanent assets. They are renting time. They're stuck on a capital expenditure hamster wheel. To stay relevant, they have to spend 600 billion again and again every few years just to stay in the same place. Let's look at history. In early 2000s, companies spent massive amount of money on laying out the cables under the ocean for the internet, and they thought the internet use is going to double every 100 days. But that didn't happen, and many of the companies went bankrupt. And 20 years, 30 years later, we are still using those cables. But these AI chips in 2028, the H100s bought today will be e-waste. It's a financial sleight of hand. Big Tech is booking these as investment, but they are really burning cash to fight a war they are terrified to lose. Now let's look at the disconnect. This is where the hype meets the balance sheet. According to a viral report by Sequoia Capital called A Tale of Two AIs, the math is currently broken. The report states that to pay back the 600 billion spent on infrastructure, the AI industry need to generate not 600 but roughly $1 trillion in yearly revenue just to preserve their margin. So where are we actually at? We are nowhere close. We have built the infrastructure for 2030, trillion-dollar data center, nuclear power plant, but we are still generating revenue nowhere close. And this creates the revenue gap. And this is exactly what the experts are pointing out when they are talking about bubble. And they have to pay a premium price for compute to companies like Nvidia, but they can only charge a price of a commodity. Think about it. You're probably paying for a LLM chatbot like Gemini, ChatGPT, or any other platform like $20 or $30 per month, but you are not subscribed to multiple. Usually most of the people subscribe to one. The willingness to pay is capped, but the cost to run these models is astronomical. And this is why the gap is not closing. The cost of entry is high, but surprisingly, the ticket sale is low. Which brings us to the deadline. Why 2026 is the make or break year for AI? Why not 2030? Because Wall Street has a very short attention span and we are running into a physical wall. Electricity. Right now, investors are giving big tech a pass. They're saying, okay, spend the money and build the brain. But by 2026, there are two forces are going to collide. Number one is the depreciation cycle. Those H100 chips that are bought in 2023 in the beginning of the AI race need replacing. And number two, the power grid runs out of capacity. We are seeing Microsoft trying to restart nuclear reactors just to power these data centers. That takes years, not just months. If that revenue line hasn't shot up by 2026, if we don't have agentic AI that can actually do our job, book our flights, and code our apps without supervision, the narrative changes instantly. Investor will force the spending to stop. If Microsoft stops buying, Nvidia stock will fall to the ground. And since the entire S&P 500 is weighted on this trade, the $600 billion gamble goes down not just as the bubble, but as the most expensive science experiment in human history. So what should you do with your money? Don't watch the headlines that are saying that AGI is coming tomorrow. These are just noise. Watch the margin. If the company is making real profit in AI, not just the efficiency gain, but the real cash on book, then the rocket reaches the orbit. But if we get to the end of 2026 and this revenue line is flat, then we have to watch for what's coming up next. Thank you for watching. I'm Sean. If you really enjoyed this video, then please click on the like button, and to follow what is coming up next, please subscribe. Thank you.